Good morning and namaskar. Today we'll deal with an agricultural products company called Krbl Ltd. This company is similar to LT Foods Limited, which we dealt with in my last video. This company is also dealing with Basmati rice and non-basmati rice and their allied products. The CMD of the company is Anil Kumar Mittal. There are two joint managing directors, Arun Kumar Gupta and Anup Kumar Gupta. The two basic business segments are agriculture, rice and rice products, which is about 96%, and then energy, 4% of the revenue. Now, it has 4 plants: Delhi, Punjab, Haryana and Uttar Pradesh. So all in a cluster, that is Gangetic belt, Ganga, Yamuna, Indus, etc. The KRBL has been focusing on exports a lot. It is exporting to about 81 countries where it is a market leader. 40% of the revenue comes from international markets like Gulf Cooperation Council countries, US, Singapore, South Korea, Germany, etc. Before we go further, let us take a look at the latest Q2 results, which are reasonably good for KRBL Limited, unlike LT Foods. In LT Foods, the Q2 results were lackluster. Not bad, but lackluster. But here they are good. The net sales at 1,245 crores in Q2 this year is 74% more year on year, that is compared to Q2 of last year, and 67% more compared to Q1 of this year, that is quarter on quarter. 74% more year on year and 67% more quarter on quarter. The raw material costs have increased. We have seen in LT Foods case also, raw material costs have increased terribly in Q2. Here the increase is 81.75%. From 310 crores to 563 crores. But compared to Q1, there is a degrowth of 12%. That's nothing. But September quarter sales are more, therefore raw material costs are also more. It is understandable. Increase in stocks is also there from 150 crores to 349 crores. That is 133% increase year on year. Interest costs have come down very drastically from last year's 14 crores to this Q2 just 1 crore. So last Q2 it was 14 crores, now this Q2 it is 1 crore. So there is a reduction of 93% in interest costs, which is quite good. And even compared to Q1, Q1 also had 17 crores, now it is 1 crore, so 95% reduction in interest costs, which is quite good. Now, if you look at the net profits have grown from 103 crores to 157 crores. 103 crores to 157 crores, which is 52% more year on year and 57% more quarter on quarter. Now, look at that. Net sales have increased by 74% year on year and net profits have increased by 52% year on year. Now, if you look at the EPS also has increased by 52%. From 4.39 rupees to 6.68 rupees. The market price currently is at around 282 rupees, which is closer, very close to 52-week low of 279. Currently 282, 52-week low is 279, so it is very close to the 52-week low. 52-week high is 650 rupees. Whether we will reach the 650 rupees in the times to come, in the nearest future, we really do not know. It depends upon market conditions rather than the company conditions. But overall, in Q2, KRBL has performed very well. Now, whether Q3 it will repeat similar results or progress beyond that or fall back to Q1 level, that is one thing that we will have to wait and see. So, the previous 4 quarters were lackluster. Now, Q2 is quite wonderful. Now, let us look at the performance of 2017-18. that is year before, latest year, compared its previous year, 2017-18 compared to 2016-17. The total revenue has grown by just 3.14% in the current year compared to the previous year. The price realizations have gone up slightly because of higher price realization in rice. Highest ever EBITDA of 792 crores, which is 21% more over the previous year. Highest ever EBITDA margin of 24% compared to the previous year of 21%. So highest EBITDA margin, highest ever profit before tax, 655 crores, an increase of 22% over the previous year. Now highest ever net profits also 434 crores, which is 9% more than the previous year. Net profit margin is 13%. That has also grown by about 9%. EPS is 18.46 rupees compared to 16.97 rupees in the previous year. Net worth has increased by 20% to 2,288 crores. The 5-year net sales CAGR is 9% growth. EBITDA growth is 21% CAGR. Market capitalization has increased by 5.53% and power sales have increased by 26%. Dividend, now this company is a good dividend payer. KRBL is a good dividend payer. It is paying 230% in the current year, that is 2017-18 compared to 210% in the previous year, which means it's really a good revenue paying, dividend paying company, 230%. Of course, face value is 1 rupee. Debt equity ratio has also improved from 0.57 to 1 to 0.54. Already debt equity ratio is very low. So debt is very low for KRBL. LT Foods is reducing, but still it has some more debt. LT Foods also is having a lot of expansion programs. Company's energy portfolio consists of 114.35 megawatts of wind power and 15 megawatts of solar power. But overall 4% of revenue only is coming. The return on capital employed is 21%. Book value has increased by 16%. Return on equity is 20%. So all are impressive. Now, export sales of rice is 1,300 crores in the latest year, increase of 20% over the previous year. Exports are growing very fast, grown by 20% over the year. So that is an indicator that in the coming years, exports will increase further and further and further. Now, in the latest year, 2017-18, KRBL has forayed into health foods. It's not producing any junk foods anyway, but it is producing health foods. India Gate sprouted brown rice. You know, all sprouted foods are supposed to be very good for health. So, sprouted brown rice and chia seed, India Gate chia seed and India Gate flax seed, all are good for health conscious people. Now, the other products of the company, a lot of products are there. India Gate is there, Doon is there, Noor Jahan is there, Indian Farm, Bemisal, Aarti, Unity, Lotus, Taj Mahal Tilla, Shubh Mangal, Necklace, Lion, Al Vizam, Train, Al Bhushan, Telephone, Southern Girl, Al Bluebird, City Palace, etc. So there are 3 distribution channels for all these things. One is traditional, the other is modern, the other is e-commerce. So in all the 3, it is energetically trying to promote its products, sales. Now, but basically all are rice products, 91% and above rice products are there. Now, Middle East region is out of exports, about 26% is in Middle East. Now, KRBL has the largest rice milling capacity in the world at 195 metric tons per hour. 195 metric tons per hour. So, in the world, the largest capacity. The company has got state-of-the-art storage capacity, warehousing, innovative marketing capabilities, R&D, aggressive expansion in distribution network, etc. So quite close contact with farmers. So through contract farming are there. So many things are there. The KRBL is doing a lot of things. Very good modern packaging unit, very good warehousing facility at Alipur and Barota. So KRBL has a wonderful sales both internally and externally. The average selling price of Basmati rice has increased by 30% in the last year. So people are willing to pay more for Basmati rice of KRBL. Now in the recent past it has increased, it has introduced Jeera rice, India Gate Jeera rice. It is very popular in Kerala, and its popularity is increasing in the other places also. Now, the overall industry growth is 16.5% in volume terms and 21% in value terms, whereas KRBL has achieved a much higher growth of 27.6% in volume terms and 36.9% in value terms, especially in the consumer pack segment. So KRBL is progressing very well. It has got good strength, good legacy is there, successful track record is there, decades of market presence, integrated value chain, state-of-the-art R&D, strong farmer relations, deal on the one side with farmers, strong relationship with the farmers, on the other side with the dealers also, wonderful network, and both are increasing. Contact farming, strong supply chain network, state-of-the-art plants and storage facilities, and it is investing in large automated facilities for both storage and warehousing. So like that, there are lots of strengths. So there are of course weaknesses. It is dependent on agriculture. So agriculture is dependent on water supply. But Delhi, Haryana, Punjab, Uttar Pradesh, water supply is reasonably abundant. So it very rarely fails. Therefore, KRBL, LT Foods also is very near to rivers like Madhya Pradesh, Rajasthan, etc. But they are slightly away. The next to the belt, there also water is okay. Therefore, the success of KRBL and LT Foods both are reasonably good. It depends upon how fast they will grow. The growth rates are not that great as on date. But they are good, reasonably good. Now, we both are at their 52-week low, LT Foods and KRBL both. LT Foods is at around 64, something like that. Here it is around 280 or something like that. But that depends upon the EPS also, earnings per share. Now, they are at their 52-week low. So that is one point that you will have to remember. Will it grow to 52-week high? Who can say? God only can say. If the market picks up well, these are worth better, especially KRBL. LT Foods also is worth, but let us watch their Q3 performance. Q3 performance is likely to be better usually, but let us see. You take your decisions. See, now Q3 results are going to be out. You can take their, look at their results and then take your decisions. Or if you want to take the decisions now, you are taking a small risk. But sometimes the risk may be worth it, because if at current prices, if you take, if the Q3 results are much better than the Q2 results, which is normally the case, you will be getting at a cheaper rate. If, that is if. So, listen twice or thrice and then take your decisions. Subscribe to my channel and tell your other friends also to subscribe. Be a long-term investor. I have always told you, be a long-term investor. Don't be a short-term investor. Short-term investors will see their stocks going down and up and down. which should not be the case with long-term investors. Thank you for listening. Now the next result season will start. The next year also is going to start. I wish you a wonderful year. 2017 was a wonderful year. 2018 was a dismal year. But 2018 can be an year of opportunity for you. I am stressing again and again, 2018 can be a year of opportunity where many scripts are available at their historic lows, 52-week lows. Therefore, it can be an year of opportunity. 2019 can be a better year. Let us assume if 2019 is like 2017, not like 2018, then all of you will be in for a great bonanza. I wish you all that best of luck. Thank you.